go. Get the speaker box loud, hitting that stuff till you hearing that sound. Hitting that stuff till you hearing that sound. Hitting that stuff till you hearing that sound.
All right, guys, what is going on? What up? What up? It is Tuesday. Know what I mean? It is Tuesday, and it's been a fun day. Hopefully you've had some fun as well. Got a couple things planned for you, if you guys are ready. We'll wait a couple minutes, because everybody always likes to show up late. You know? But we are who we are, right? We are who we are. Drop a like. Drop a like on a stream. Flacco hesitated. I don't blame you, though. This was lunch, broski. That was right at the tail end of lunch, so I don't even blame you. I don't even blame you, my friend. But I was watching that right before the stream started. I was like, oh, I wonder if we're going to react from this imbalance. And then we just bang. I'm like, oh, shit. SMP did not come to play, dude. SMP did not come to play. But we'll discuss it, man. We got, like I said, we got a few things to go over. Continuing on between a mix of what we talked about yesterday and what we talked about last week. You guys ready for that? Are you ready for that? Drop a 1. Drop a 1 if you're ready for that. If you are ready to go, drop a 1. Was good, Monkey. First today, very nice. I think you got your blue snapper today too. Unless that's a different, I don't know. Anyway. Was good 2020, Naruto, Shay, Millie, Capitalist, Eberneth, Crispy J, Flacco, Toby, Simon and Aaron, Capitalist. Let me see. G, what's good? Hermita, MJ, Edmundo, what up, man? What's good, Sean? NQ swept liquidity, I think is what you meant to say there. Manipulated, and ES accumulated, but because of lunch, I was kind of like, eh. No, that's why I said I don't blame you for not taking this. That's just one of my rules. I usually don't trade lunch. If I'm going to, it's probably going to be at the beginning, but I almost never trade at the tail end of lunch. I wouldn't usually do that. I would not usually do that. If ES and NQ have downside liquidity, but the Dow is upside liquidity, do you still consider it a low probability condition, or is the Dow just not significant enough to count on? It's trash. Well, gee, the Dow is always trash, bro. It's trash. I wanted to save that for later. So remind me later, G, because I do have something for you on Dow Jones. So remind me of that before the stream is over. What's good, Marshall? All right, let's get into it. Should we clip this or not? Yeah, I guess I can. Yeah, fucking I'll do it. I'll do it for you. All right, so yesterday we went over framework, right? And I showed you this. I showed you this image, right? We brought that out. And we talked about consolidation / equal highs or low resistant highs, where we would see levels of distribution, and then we would see a run on liquidity. And if the market is going to trade for those highs, it would set the low at a liquidity run. And then we would see accumulation, reaccumulation, and then liquidity on the upside. And that is broken down into different stages or different legs, where you have like your low risk buys or anything part of that first leg of accumulation, and then that second leg up to liquidity. All right, you guys remember that? So if we were to follow up with what we talked about yesterday, right? What we did is we marked up one of these lows in here. I don't remember which one it was. One of these two. And I said this was a shallow run, but nonetheless, I gave you these equal highs up here, 56.30, right? And then so we looked at it like, well, this might be a low risk buy first leg, and then maybe a second leg to go higher. And I believe I pointed out this imbalance here, and then it was the end of the session, and then, you know, that was it. So if you were watching it, that well, I'll just label it how I did yesterday. So traded into it multiple times and then off of it, but it comes right back into it, and then it just trades right past that. But I want you to pause here for just a second, because this is kind of a 2-in-1 lesson, right? If you were here yesterday, you can tell me if I'm wrong. I told you specifically that this was shallow, that I like long wicks to the downside or the upside, right? That was way before this formed, by the way, because that wasn't until 1:45. We were off the session like half an hour or more. So we get a more pronounced stop run at 1:45. So the framework, right? This was not the low to go up to the equal highs. This was. So then in the after hours, I'm surprised we didn't get that like right at 255. I was a little bit, so I was like, oh, that's interesting. But nonetheless, the framework still played out. And I did post that in the Discord, just so you know. Right? And I'll go ahead and show you that here as well, because, you know, I feel like I'm pretty generous, you know, when it comes to teaching you guys stuff. And that's what that looks like. Not overlapped, but under it. So your job, okay, as a student, I think one of your jobs is to challenge the things that I tell you. Put them to the test. See if what I'm telling you is worth learning or worth avoiding. I told you about the equal highs. I told you this was a shallow run. And it might be, but I like to see longer wicks than that. Now this is SPY. Okay? Not ES, but they did the same shit. So SPY ran its low the same way ES did. It rallied, it crossed 50% and then traded lower consolidation. What do you see right here? You see these two down candles, right? We trade through that on this green candle here. So what does that next candle do? You didn't look at it, did you? No, John, I just kind of glance at your chart and go, yeah, that's badass. And then I go on about my day. Dude, you could spend like 20, 30 minutes on one chart. Look at it. Look at the information. Look at the chart. Not the chart. Look at the framework that I gave you. And that was before all of this panned out. Do you understand that? Fuck. The screenshot was like a day prior to everything panning out here. Because this is how the markets work. This is how they operate. You understand? They're coded. It's designed to do this. All right. And you can see that. It's not picture perfect. It's not, just like I said, it's not going to be like in lockstep where it's going to distribute liquidity. We saw it distribute, rallied for liquidity, like a small time frame high, and then made the low. So it's not going to be picture perfect. But the idea, I color coded it for a reason. I color coded it for a reason. Every color has its reason, you know, right? That's why I labeled the gray box here. I didn't label any levels of distribution, but the low that was set, that's this low here in the pink box, right? Pink has always been liquidity, always been. It's never been different. Well, unless you met me in like 2019, I just drew whatever the fuck. But after a certain point, after I became an educator, then I was like, okay, let me color code things. And then you see this accumulation after liquidity, right? Accumulation after liquidity, and then you should see a run up to the highs, right? And that's what you saw. This is how the markets work. This is how it works. And then to even take it further, right? Just to spoil you. I also took the same image and then overlapped it so you could see it line for line, right? I uploaded the image, changed the opacity to like 20 or something. So you could, it's like a ghost, right? You can see both overlapped. Equal highs, just like the image. Distribution, not like the image, but you still saw a run on a higher time frame concept. This low is that concept. Because that's lunch's low that was met in the PM session. Boom. Previous session liquidity, right? Oh, I wonder if we have a video on that. Come on, chat. And then green box, up to liquidity, pink. Do you see that? Now, if I may be egotistical for just a brief second, if I may just ask you, who has shown you anything more badass than that shit right there? What is more badass than that right there? Showing you an image that I made a day prior and then overlapped it with real price action from the following day on that session. Is that not cool? Like, seriously, is that not pretty fucking cool? I'm literally giving you guys this. Gave it to you. And I also said, you can take this image here and you can invert it, right? To do the opposite. So that means we would have what? Equal lows instead of highs, right? We'd see a run on liquidity and then a move lower. And that's where the fun begins, because that's where I told you today. Oh, shit, we dumped. Anyway, before we get to all that, before, I'm going to take that line off. Oh my God, we just shat, dude. The fuck is going We just absolutely ripped ass, like 10 points in like 5 minutes, which is interesting. But anyway, we'll get to that. But let me just stick to the lesson here for a minute. That's funny though. We just ripped ass. All right. Back to the real shit. Equal lows. Right? And equal highs. Boom. Wham bam. Thank you, ma'am. At our equities open at right at 8:30, and I'm up, you know, I'm watching it. I'm like, fuck, I don't know if we're gonna go higher or lower first. So I'm like, let me just wait. Let me just wait. So we trade higher. Then we trade off of it. Then we trade higher again. What is the first? I tweeted this the other day too, in case anybody ever caught that. Because somebody asked, like, you know, what's the first model? The first model is a run on liquidity, right? How far can price go above a high? An imbalance. Well, John, this is fucking all-time highs though. How far can it go? I already gave you a measured move, my friends. Right? The measured move, 5, 10, and 15. So there's 5 above Monday's high. All of this, nothing here is new to you, right? You take whatever that high was from Monday, you add 5. There it is. That's how you do that, right? How do we know the high's been set? Well, you don't know, but you wait. Okay? Taps that. Trades above 1 tick. That's fine. That's fine. But lo and behold, my friends, lo and behold, if the market has traded above equal highs and met a measured move, which we saw by adding 5 points to Monday's high. Today's Tuesday, so yesterday being Monday, we add 5 points to that right there. Then we sell off. But what's the target though? You already know what the market does. It trades from liquidity to what? Opposing liquidity, right? Yes, of course it does. So we get our sell-off, do we not? Yep. If we have our target and we have our high set here, 56.3775 is our 50%. We obviously crossed that, right? Go look at the time. Go look at the time in the Discord. (9:13 a.m.) Oh, I tweeted before that too. Not tweet. I didn't screenshot the other one, did I? I could have sworn I did. Well, anyway, I tweeted, or I mentioned in the Discord at 9:05 that I wanted ES lower. It's in there. It's not edited. It's in there. Okay. Now at 9:13, I said Nasdaq making new high. Should have said new highs. I was typing fast. ES not. Okay. It doesn't get any more clear than that. Nasdaq is making a new high. ES is not. Interesting price action this this hour behind Powell. That was at 9:13, which is here. So I'm giving you I already gave you the bias at 905. That was during this candle right here. I said I think we can go lower, below these lows. Then at 913, I told you Nasdaq made a new high. The S&P did not. So that signifies what? Weakness. So guess what? We do kind of dance around for a minute. Then there's an imbalance right there. And it absolutely rips right for those lows. Because look at this formation now. We really got to get some chart room on here. Can't see shit. It is kind of a little, I don't want to say warped, but it's not as as drawn out as the images. But fuck, dude, we're just gonna delete everything, man. We got too much shit going on. We got too much shit going on. If there's your run on liquidity, look at those wicks. Look at that wickage, by the way. Okay. Crossing 50%. Retracement, that's your low risk sell, which I practically gave to you at 913. The bias was like 8 minutes before that, and then we collapsed. Not even 30 minutes, and it dumped 9, 10 points, something like that. Easy, dog. Easy. You said NQ is melting? Oh, that's not a surprise. We got lows, my friends. Triple Qs. You didn't look at the triple Qs, did you? 495. It's not a surprise that it's melting. It's not a surprise. You know what, too? There's a mitigation up here as well. Now, if I may stunt for a minute, because, you know, I'm allowed to do that. I gave this to you as well. If you paid attention. Well, hold on, John. You didn't say anything about a mitigation. You're right. I didn't. I didn't tell you it was a mitigation. But I did tell you that it was making a new high. You can't have a mitigation without a higher high. So if the one that manipulates mitigates, and I gave you the one that's making a new high, that traded at 945 into that. And this was a new high that ES didn't do. That was manipulation. The one that manipulates usually mitigates. What's the high probability target? Oh, well, there's a gap. Well, you're right. There is. That's already been met. So what would be next? Either previous day's low or something lower. And you got equal lows down here. So the bias would be short. Right? So what do you think I'm going to mark up for you here? Consolidation / lows. A run on liquidity. Give me a minute while I draw this for you. It's going to take a second. Doing it all the proper way and shit. All right. That box is there. Well, I don't know where I would draw these levels specifically, but that's what that would look like for a run below those lows. That would be the idea, the framework at least, right? What's the overall framework? Bro, brethren, it is the inverse of this. It's the inverse. It's opposite. I still don't think I can because you got to flip this like one more way to invert it somehow. We're not doing all that shit. We're not doing all that shit. But instead of highs, let's break this up. I can't put this anywhere. Instead of highs, it would be lows. Levels of accumulation, liquidity, and then distribution to go lower below lows. Can y'all see that? Give me one more second here. I'm trying my best, chat, okay? So just bear with me for a minute. Okay, now do you see it? It's the exact opposite. So instead of gunning for equal highs, we would be gunning for equal lows. So that's not a bad example, okay? So Nasdaq, the bias was short because it's giving us a framework to go lower. S&P, you might not have saw or seen this. I don't know what the English is, bro. And this might be a stretch, but I think there's lows pretty much everywhere. And SPY too. And some lows like way down here, which we're not close to, but we do have some lows way down there as well. But in any sense, we go back to this morning. That is what makes trading easy. Trading is difficult. I'm not going to make it seem like it's always easy. I don't always get it right. You know, like yesterday, I thought that might have been the low and it wasn't. But then we got our run and that was the low to go higher. So the opportunity to short today was pretty nice for ES. NQ today, same thing. We had some highs. There's that higher high at 910. 910. You see that? 835 to 910. That's a higher high on Nasdaq. 835 to 9. Or maybe it was here. Maybe it was right there. It was somewhere in here. Anyway. Higher high on Nasdaq. We definitely trade lower. There's your mitigation. Right? High, low, higher high, bodies. Done. Toast. Okay. Now with the Dow, and this is why, G, I wanted you to remind me later. The Dow had 39,680, which I did not see at first. And you might think, well, what the hell is 39,680? What could possibly be up here? Well, at first glance, I don't know. But if you go to regular trading hours, oh, that's right, John. Fuck, you always talk about that, and I didn't do it yet again. Bam, I can give you the rules. It's up to you to follow them. That ended up being equal highs for Dow. Oh. Oh, shit. Yeah, and that's what made that pretty spectacular to go higher. So, regular trading hours. And that's just an old high. But we would cut through all of that to get to that. Does it make sense? So it's kind of weird. Like, a lot of people wouldn't understand that. It's like, why would this be equal highs? And well, it's not in on like the future side, but in the open market, it is. And if you go look at DJI, it's right there too. Bunch of highs, triple highs, almost. So what do you do with that? Honestly, I really don't know. Dow, I almost always just, I hardly ever trade Dow anymore. I prefer ES and NQ, okay? Because they're a little bit easier for me to trust. I think the lows and the highs are a bit cleaner on NQ and ES versus the Dow. So I would just not trade Dow, to be honest with you. So, but anyway, welcome Edgar, Slim, Cameron, Libright. I know I was trying to clip that video so I don't have to edit everything, you know, spend 3 hours trying to edit a video. But I saw all you come in. Was good, Electric, Kali, Anthony, everybody. Not the Russell 2000. Oh God, not the Russell 2000. Anyway, no, I'm not a market maker. I just try to find out what the market is going to do and then get in alignment with that. And that's the easiest way. Literally, it's the easiest way. But it looks like we have more than one or two legs of distribution. We have like several. So that kind of like goes against the model, you know, the framework really. So, but would you long this? No, I wouldn't long this. If someone did, it wasn't me. It wasn't me. All right, so let me just pause here for a minute. Monday, we went over the framework of this, right? Your roadmap, if you will. So we went over that. And we looked at like SPY/ES longs, which ended up not working on the session because I made a lower low. That was the manipulation, and then it panned out. So I wasn't able to be perfect for you. So it shows my humanness, all right, which is cool. So, but it still worked out for the session, okay? Today, right, being Tuesday, we talked about the inverse of that. The inverse of that for going lower, which we saw and I demonstrated for you today in the Discord ahead of time. One thing I need to do, give me a brief second here because this is bothering me. This is bothering me like a motherfucker. Okay. So it wasn't, fuck, I don't even remember. Sorry, chat. I'm pretty sure, I guess it was that a higher high on Nasdaq and that lower high on S&P. I think that's what I was referring to earlier, not this high. It was this one. So slightly lower on ES there and higher on Nasdaq there. So that's what I meant. Okay. I was confused earlier. I'm like, it was there somewhere. That's where it's at. So from 9 o'clock, do not disturb, motherfucker. 9 o'clock to 9:10, I guess is what it was. Just for clarification. That's what that looks like. Beautiful. You see that? 9:12. Boom. New highs on Nasdaq. ES couldn't do it. And then 9:13 is when I said something in the Discord. So that was pretty like as it was happening live. Because that's not a far delay. 1 minute later. Then we get our dump, right? Short the weak one, right? Yeah, that's kind of cool. Okay, anyway. Sorry, I had to clear that up before we move forward because I wasn't going to let that go. I want to be right. So. Anyway, equities open. Where's that mitigation at? Above equities open. I've already sent it, Mia, and I've already shown it in the chat dozens of times. If you don't have it by now, I don't know what to tell you. But yeah, mitigation above equities open. Aiming for liquidity that obviously is way below the open. Session open, at least. Can you explain the word distribution? Not what it does, but what it means. Distribution. What it means. All right. I guess I can do that. So, if the market is going to go lower, it usually goes higher first. You know this by now. If you've been here for at least a few months, you know that by now. Okay? The reason, and this is just this is how I think of it, okay? The market for NQ, okay, the Nasdaq goes higher in order to distribute longs. Somebody was long from, I don't know, like this new low here, pre-market, equities open, everybody wants to get in, right? Oh, the market's open, the bell rang or whatever, and shit's moving, right? So people are buying and selling or whatever, you know, all that shit. So anybody who has been long, like let's say smart money, for example, they are going to want to distribute to where people are selling. If I am a buyer, if I'm smart money and I'm a buyer, I want to sell it to somebody who's willing to buy. Who's willing to buy above old highs? Dumb money. The exact and literal opposite of smart money. So smart money is going to distribute their positions. They're going to sell to whoever's willing to buy. And that's why the market does that. When ES fails to go higher, it's already hit the high once, hit it twice, hit it a third time, and then came up there a fourth time, but it couldn't make a higher high. So that was short-term weakness. I mean, you know, that's why you don't see often, at least, you don't see like 5 runs. You don't see like 1, 2, 3, 4, 5, and then lower. You hardly ever see that. It's usually once, sometimes twice, and then it'll run lower. Okay? And that's what I'm saying. That's what distribution is. They're distributing longs to people who are willing to buy above old highs. So that's what I mean by distribution. Now you can have, like, say this consolidation here is distribution, right? Because if they distributed it up here and that's manipulation, that's going to be the high of the day, most likely. but that's probably going to be the high like of that session, or of at least, you know, the next couple hours or so. Then the market obviously has traded in the opposing direction. This is that neon sign saying, hey, smart money, I'm ready to go lower. Right? Function of a mitigation. We're into mitigation now. Function of a mitigation. Price comes back up to these levels, whether it be the down candles, or some of you marked the up candle here, which is a fractal high, by the way. I wouldn't have knocked you for it. It's overlapping. Remember, sidebar, you can have multiple models at the same time. Imbalance as well. But the function of a mitigation is for smart money to distribute their longs to people who are willing to do what? Buy on the way up. So they're getting out of their positions before the market does some shit like this. Because they are likely not going to want to hold longs if the market's going to shit lower. Okay? Why do you think? Okay, you have to ask yourself. I say this all the time too. It's been a while though. Why do you think? You need to investigate. You need to investigate. Why does price make a high of day here? Why does it make a high here? I don't know why it made a high here and here. I mean, there's obviously reasons, but when you look at and study either the high of the day or close to the high of the day, it's going to be for at concepts that you've already taught or already have learned about, that I've taught. Because that is the function of price delivery. It's coded to do everything I just told you. That's why I'm able to tell you my bias is short. And then 12 minutes later or whatever it was, tell you, hey, Nasdaq made a new high, S&P didn't. Which tells you that S&P is weak. And then not even 20 minutes later, it shits the bed 9-10 points. Which is, let's say, so 10 points would be $500 a contract. Right? I would not be able to do that. I would not be able to tell you a bias and be right more times than wrong. I would be right 50% of the time. I'd be wrong sometimes. I'd be right sometimes. There would be no real edge. But you don't see that. I am wrong sometimes. Yes. I'm not perfect. No. You know, just like yesterday. But when it's super high probability, it's because I'm following this along. And that's why I came out and started telling you guys about not just the models, but also that there's an order to them. Remember yesterday? I keep referencing shit that I've already said. You remember yesterday I told you can't have a mitigation without a stop run. It doesn't go stop run, or excuse me, it doesn't go mitigation and then stop run. No. It will always be stop run first, mitigation second. The mitigation is subservient, if that's the right word, to the liquidity run. It will never be opposite of that. So that's why when you understand multiple models, and I told you having one model was stupid, or at least not knowing other models is stupid, because how are you going to know to trust that mitigation if you don't think that's a stop run? You won't trust it. And then you won't take it, and then you'll miss it. And you'll watch the market go lower, and you're going to be sitting here thinking, man, why the fuck did I not short that? I watched it, I saw it, I hesitated, I doubted myself, but then it still sold off. It's like, oh, damn. You know, trading sucks. And you get frustrated at yourself. Because I'm trying to give you all the answers that you need without it taking you 5 years to learn how to do it. You're not trusting a mitigation here because you don't understand it. This is a stop run. How do you know that's a stop run? Well, number one, look at the fucking wick. It closes below the low. That by itself doesn't really mean much, but it's in comparison to ES. When ES was lower, right there, it was lower. That's your indication. Why else would Nasdaq make a higher high? It's not for you. It's for smart money to get out. Because I can tell you right now, think about it. Every candlestick here is a transaction. Do you understand that? Everything here is a transaction. Somebody bought and sold at these levels, bought and sold at these levels, bought and sold at these levels, right? So that means somebody, and they're probably wanting to jump off a bridge, but somebody bought at 20,771 and 3/4. Somebody bought that. Somebody out there bought that, and they're probably GPSing a bridge right now. You know, dark humor. Sorry, I was in the military. Give me a break. Right? But somebody bought that. Somebody bought this. Somebody bought right there. And they're probably right behind them too, going, yeah, man, this trading and this is bullshit. It's not bullshit. You just don't know the rules. You just don't know the rules. The more you see it, the more you will believe it. That's why sometimes I tell you guys, you need the experience. But some of you are starting to get it, right? Lee Bright, I came out and told things already, and Lee Bright was like, oh, I found that on my own. I didn't even need, you know, I mean, you don't always need me, but I like to think that, you know, that you need me, but I want you guys to be self-sufficient. And so, you know, when Lee Bright came out, I was like, oh, well, I noticed that, you know, well, the next candle entry on this time frame is a smaller time frame, something else. Yes, you're supposed to learn these things on your own, but you have to investigate. You can't wait for people like me or other YouTube streamers to tell you everything. I can tell you right now, they don't. I've seen the other streamers, and I mean, they're great. There's great people out there. I'm not saying that they all suck. There's good streamers out there, but they're not going to tell you like every bit of information here. Up candle right there, boom, right? They're not going to tell you those things. There's a lot of people who don't know all of this stuff, and even the ones that do, they don't like being educators. They just want to trade, you know, do what they got to do and give the middle finger to everybody else. But I like helping people, you know? Not that I want to get into my story today, because we're not going to get into all that. But, you know, people begged me practically. You know, they're like, John, show me how to trade. Show me how to trade. I'm like, man, fuck, I don't want to do that. Right? But I eventually caved in and started teaching you guys how to trade. And so when you learn this and its opposite, because there's two frameworks, one to go higher and one to go lower, you will start to see it. Remember the other day? I said, I brought up the Matrix, and I went, this was on my Facebook, by the way. I said, you know how in the Matrix, when Neo is learning how to fight, like jujitsu and all that shit, and he's fighting with Morpheus, right? And the other team members, I forget the guy's name, but he's in front of the computer, and all the rest of the team is in front of the computer, and they're watching them fight, right? But on our screen, all we see is the green, the zeros and ones, the zeros and ones. We don't see anything. We just see code. That's it. We're like, what the fuck is that? But the team members are going, oh yeah, man, they're fighting. Look how fast he's throwing punches and doing backflips and all this shit. Because they can see it. We see code, but they see everything else like for what it is, right? And that's like what this is. A naked chart with no understanding of how price works is why when people get into this, and all of us went through this, the first time you looked at a chart, you had no idea what was happening. You had no idea about open, high, low, close. You had no idea about manipulation. You had no idea about framework, about time of day, about sessions. You didn't have an idea about none of that shit because none of us did. You have to be taught these kinds of things. You know because I do too. We all know exactly what it's like to look at a chart and not know anything. Be like, what's going on? What's going on? Is it going to go higher or lower? Well, I don't know. Well, which time frame do I use? I mean, I don't know. The 5 minutes doing this, but the 15 minutes doing something else. Like, I don't know, man. You have to understand framework. To understand framework, you have to understand each concept. You have to understand liquidity. You have to understand manipulation. Pretty much the same thing. You have to understand narrative, I guess you could say, or at least context, right? That's why I speak so much about it. That's why I speak so much about time, price, and context. What I'm teaching you individually is one of the three things. But when everything comes together, it's all three: time, price, and context. Yeah, thank you, Ibranith. But you guys are welcome to donate anytime you want. I'm still waiting on that guy, by the way, to show us what he's going to do with what we gave him. Was it like a week ago or something? And it usually takes some time, but it's fine. It's not a big deal. But anyway, that's what I wanted to portray to you guys today. Is the framework and following up with ideas that we've already talked about. Why, and again, not to brag, but why I can tell you things like, oh, I think the market's going to go lower. And then 30 minutes, 45 minutes later, you check the chart and it's massively lower. And you're like, well, what the fuck? I'm just a guy. I'm just behind, well, technically 3 computer screens. That's it. I have pants on today, just so you know. But, and in the other case, I'm just in my drawers, bro. Like, I don't control markets or anything like that. I look for high probability setups and then trade them. I don't trade every time, but I'll either trade them and tell you, or I'll tell you. Or sometimes I'll trade them and not tell you and be like, well, you missed it because you didn't look for it. I don't want to spoon feed you too much. You guys are spoiled, bro. You guys have no idea how spoiled you are. So, anyways, yeah, Anthony, I would hope people take notes because this is a free stream, but it is going to be saved as members only. Toby, I don't do measured moves on anything except majors for currencies, the dollar probably, and then ES. I don't do measured moves on Dow or Nasdaq. I just never seem to really figure that out. So I know a lot of things, but I don't know everything. Okay. So, oh, Flacco, good trade, by the way. I mean, good trade, LOL. Good question, because Powell did speak today at 9. I don't care. I still told you what I thought was going to happen, and it happened. So that doesn't bother me. It doesn't matter to me. The market's still going to do what it's going to do, but the news, like Jordan and Zach and the other Trade House members, they talk about that all the time. The news is the excuse. News is just the excuse. But news highs and lows can be liquidity too, which you can easily see that example here by having equal highs during that time period of his speaking, which was rated later on. So yes, news events, highs and lows can be levels of liquidity too. I usually don't talk about that very often, but I gave it to you now. So if you don't write it down, that's on you. But Toby, the markets, they are ran by each individual currency, okay, is headed by its central bank. Right? The BOJ, the Bank of Japan, our central bank. Each central bank has its own currency. It runs on its own algorithm, is what I believe. I could be wrong. I've never been to Japan. I sure as shit never been to their fucking, bank, their central bank, and went, hey, Japan central bank, do you run your currency price delivery system on an algorithm? Could I see that, please? Like, come on, right? But this is what I believe, okay? That each individual currency at the central bank level, right? Central banks own currencies. Each currency has its own price delivery mechanism. And I believe it's the same for our markets as well. I mean, think about it. Again, if I may brag here for just a minute, think about it. I've told you time and time again, I don't know how many times, I've always talked about measured moves, right? Monday. Remember, add 5. Okay? And price this morning, let's go to a 1-minute chart. Price this morning is somehow, magically, randomly, all-time highs, but we just so happen to peak right at 5 points above the previous day's high, and then we rip lower. And people are going to argue or tell me, oh, the market doesn't have an algorithm. Well, then how does it turn at a price point that you've already known about for months and years even? Because this is one of the first lessons I taught like 5-6 years ago. Right? So the idea that they aren't coded has been disproven many, many times. And if it's coded to distribute there and then it shows distribution, then it's going to seek opposing liquidity. That is what makes trading easy. And that's why I posted in the Discord. Cameron, I went over that already. You silly goose. You love being silly, don't you? Silly old Cameron. I'll show you. I thought we banned Cameron. How are you back, bro? I keep banning you. How do you keep coming back? I'm gonna have to fire my moderators. You guys suck. You guys suck. Not doing your job. ES, 9 o'clock to 9:12, lower high. 9 o'clock to 9:12 is a higher high on Nasdaq. And if I may, this was also a bull flag on Nasdaq. Look at that. Little bull flag, right? Oh yeah, little bull flag. Little Johnny. Oh, bull flag. We're going to buy it. No, no, no. Bull flags after a bull market is bullshit. Yeah. We got to put that on a flag too. I'd put that outside the front of my house. Like, what does that say? Bull flags after bull markets are bullshit. How's that for, another quote? All right. That's why, Cameron, because it distributed above old highs. And short-term weakness on ES, which was distribution for Nasdaq. Okay. That was up here. That was right there. See that? And that's it. So. Let me just scan the chat one more time. We got like 75, 76 people on here. Very, very cool. Very nice. It hasn't been this much in a while. Drop a like on the stream if you don't mind. Thank you, MJ and Ibranith, for the $4.99 each. I appreciate that. Your boy needs that Uber Eats tip money, right? For the Uber for the Uber Eats. But no, the donations that you guys provide here will go to the humanitarian relief in Pakistan. But Yeah, that's where it goes to. So, because we just gave out $200 like a week or two ago. So all the money that you guys do donate here just goes directly to that. So we're putting shoes on kids' feet, dresses for some of the girls that, I forgot what event that was. It was a religious thing that they did. Backpacks, school supplies, you know, all that kind of shit. So yeah, we're doing that too. So thank you, Shay Millie, for the 5. So we're up $15 on the day. Very nice, very nice. I love it. But anyway, that was pretty much everything I wanted to show you guys. The framework, the inverse of the framework, utilizing what I'm teaching you guys to give you trades in the Discord. So you can actually start to look like, oh, why is he bearish? Why is he bullish or whatever? I mean, you know? Sick of all this disrespect. Well, it was Mia who started it, you know? I don't know how, but she started it. We can just blame Mia and be done, you know? So, or anyone else from New York. If you're from New York, it's automatically your fault. Because you're from New York. So, y'all be good, man. We'll be here same time, same place on Wednesday the 10th for the next market review, or excuse me, for the next live session. Sorry. The market review I will put out tonight. So that'll be in about 5 hours, maybe earlier, if I can get it done. So I want to wait for the rest of the afternoon to commence. I don't know if the Nasdaq really wants to sink lower. We have 2 hours left in today. If we do continue, I wouldn't be surprised if we get 20,579. And then, like I said earlier, on triple Qs, we have 495.48. So I would put an alert there as well to see if that framework pans out today or not. Okay. Thank you, Edmundo, for the $4.99. Appreciate that. I'm sure the individuals out in northern Pakistan are going to appreciate that as well. So you guys be blessed, and I will see you tomorrow.
So